Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Libya's eastern government says it will shut down crude output and exports as dueling governments fight over leadership of the central bank. Stocks lower as big U.S. tech drags on Wall Street ahead of NVIDIA's much-anticipated earnings report. And Canada slaps 100% tariffs on Chinese electric vehicles. China is warning of consequences. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. We're coming off a day of a UK bank holiday in the UK yesterday, which meant for thinner liquidity than usual. By the end of the day, Wall Street was somewhat mixed, though we did make new record highs for the Dow. The S&P is about 0.8% away from all-time record highs, but we did see somewhat of a pullback in NASDAQ, some of those tech stocks slipping ahead of those NVIDIA earnings that are coming out tomorrow. Today, you can see the futures also trading sideways. S&P not really doing much, but leaning towards red. Same thing for the NASDAQ. The dollar also leaning sideways today, but of course the theme of the last week has been one of a pullback. The dollar down about 3% over the course of the month. And then a lot of activity around energy yesterday. Today, again, seeing it come off a little bit, down 0.25%, but over the course of the last couple of days, oil is up 5%. Yesterday, up 3%. You would think it was on back of the geopolitical developments in the region, the tit for tat between Israel and Hezbollah over the weekend, but no, the catalyst was actually Libya this time around, and we're going to talk more about that shortly. We are looking at some disruption coming through from supply. Let me just show you our terminal chart today, which tells you that disruptions coming through from Libya aren't that uncommon. We saw it throughout COVID and through other periods in history, telling you that in general, this tends to be a part of the world where output is quite volatile depending on political circumstances. So more of that in just a moment. But for now, let's continue with the markets theme. Avril Hong is in our Singapore studio standing by. Avril, what's on your radar this morning?
It's all about tech today, Jumana. I mean, as you can imagine, it's really the anticipation of NVIDIA earnings later in the week. And ahead of all that, those chip makers with their fates closely tied to their U.S. counterpart are the ones that are dragging Asia's stock gauge lower. TSMC, the one declining on the TAIEX, as you see there. But the other key theme, as far as tech is concerned, is weak Chinese consumption. That's what we got overnight when Pinduoduo earnings were released. And it really showed you that revenue as well as the warnings about sales growth. So we saw the U.S. listed stock tanking about 30%. So these are the themes that are actually affecting tech. But we're seeing a bit of an outlier in the Nikkei, the yen weakness coming a bit back to the fore. Jumana.
Excellent. Avril, thank you so much for the overview. Well, on to the top story that I was mentioning at the top of the hour. Libya's eastern government is threatening to stop all oil production and exports nationwide. It is the latest move in a struggle with its Tripoli-based rival for control of the central bank and the nation's energy riches. Crude has leveled off after a three-day rally as the potential halt in Libyan supply is overshadowed by a shaky demand outlook. For more, let's bring in Bloomberg's Middle East energy markets reporter, Anthony DePaula. Good to have you with us. Yesterday, I would have thought we'd see more of a move on back of the geopolitical developments in the region, the tit for tat between Israel and Hezbollah. But at the end of the day, it was Libya that provided most of the support for the energy market. Just walk us through what's going on there.
Good morning, Jumana. Yeah, you're right that we did have some support earlier in the day on the back of those Israeli attacks on Hezbollah and kind of, as you said, that tit for tat. But it really took off after this Libyan announcement, and oil had a nice kick higher towards the end of the day. And that's because the oil market has really been reacting with a certain nonchalance to the issues around the Israel-Gaza war, because so far that conflict hasn't spread to the wider region, hasn't affected oil flows, whereas this Libyan shutdown threatens to impact real barrels, to take real barrels off the market. Yeah. We're already hearing few details, but some of the oil production companies are going to start ramping down production gradually, and the Eastern government has called a force majeure, so they will be able to not honor those shipments and those contracts. But we'll have to see how long it takes them to shut that oil down and how long it stays off the market for. I mean, this is a political issue. So just as they can decide on a political basis to shut down, they can decide if there's an agreement to ramp that back up again. Of course, these things take time, so that's going to have that physical impact on the market.
I know it's really difficult to ascertain, and you don't have a crystal ball, but do we have any visibility on how long these disruptions could last for? What do you think the market is pricing in, if there is such a thing?
Well, we've already seen some commentary from Citigroup earlier yesterday saying that it could get up to the mid-80s if there is some oil taken off the market. Goldman Sachs was out with a report today, not really referencing Libya, but talking about reducing their price forecasts into second half of this year, next year, because of that oversupply. The oversupply figure that they mentioned in that report as being a negative for oil prices, well, that's amount of oversupply is less than Libya's production. So if Libya takes off all that production, that kind of gets rid of that oversupply in the market. Now, I wouldn't think that we're going to have this long-term through the end of the year outage of the Libyan production, because this is the income for the country there. And that's why we have this fight in the first place. It's over the central bank. It's over control of those funds. So Libya really needs that income coming in. So I think they're going to have to work quickly to try to resolve this issue. Yeah,
no, absolutely. But interesting context there about the supply and broadly speaking, when we talk about some of the downward pressure on oil, it's coming from non-OPEC supply. And in this case, the fact that they're taking, let's say, a couple of 100,000 barrels off the market isn't necessarily massively bullish for the market because it was so well supplied to begin with. So that's the context. Anthony, thank you so much for breaking it down for us. Bloomberg's Middle East energy markets reporter, Anthony DePaula. Well, despite a day of relative calm, tensions remain high in the Middle East over the prospect that a regional war could erupt. That is after Israel mounted what it called a preemptive strike that took out thousands of Hezbollah missile launchers. On the Gaza front, negotiations to reach a ceasefire deal continued on Monday. Although Israeli officials say progress has been made, Hamas suggested otherwise. Now, joining me now is Karen Young, Senior Research Scholar at Columbia University Center on Global Energy Policy. Karen, a great day to have you on to talk through the economic ramifications of everything we're seeing. In addition to oil, I was just speaking to my colleague, Anthony, about how relatively resilient oil prices have been to the geopolitical developments, specifically in the Levant region. But what we're witnessing overnight, of course, is a potential supply disruption coming out of Libya. So to your mind, how seriously should we be taking the threat of a sustained supply disruption coming out of Libya?
Well, I think Anthony's analysis was spot on. It shouldn't take very long because the Libyan government and all of the parties are completely dependent on this revenue source. So one would expect them to come to some sort of agreement, choosing a new central bank head, for example. But it does speak to how the market has not been jittery on things that we would expect it to be jittery about. A conflict in Israel between the Israelis and Hamas. But when we do have an actual supply disruption, that's when things tend to shift. And so, since October, we have seen, increasing level of threats of the threat of conflagration, of a direct involvement with Iran that happened in April. But even that didn't really move markets too much. And that's because we didn't see a direct attack on any oil facilities in the Persian Gulf. We didn't see a direct blockage within the Strait of Hormuz or the Bab el-Mandeb. And so that's really, I think, still what would be the indicator or true kind of movement to indicate that, we have a real problem in supply.
Yeah, and I know you take a look closely at the economic ramifications of the region, particularly in light of the war that's been going on since October 7, but even well before that. And again, another interesting observation is, with the exception of the obvious countries, and here I'm talking about Israel, Palestinian territories, Lebanon, there hasn't been that much of an economic impact on broader GCC or other countries within MENA on the back of the Israel-Gaza war. Why do you think that is the case?
Yeah, I mean, the region is really disaggregated. So when we think of a MENA economy, there's always been a difference between oil and gas importers and exporters. But more and more, we see this widening gap. And really where growth is happening is in the GCC. It has continued to be resilient. The Gulf states have had better access to capital. They've been able to borrow and continue to borrow, really dominate debt issuance across the region. And then we have countries that are struggling more with with debt, with inflationary pressure, and those include both oil and gas importers and exporters. Libya is a great example. I mean, countries that are less diversified, have less access to technology and investment, are the ones that are having a harder time economically.
How well do you think Saudi Arabia, UAE, Qatar are doing with their diversification efforts? Obviously, they have national plans in place, Saudi 2030. Qatar also have a national 2030 vision. Are these diversification efforts working?
They're working, but we still see a dominance, of course, in traditional energy markets, but also entry into renewables and entry into new manufacturing of solar manufacturing, of potentially EVs. So the openness to kind of do two things at one time. It's possible to have a hydrocarbon market and also to be invested and to be thinking about diversification. So that's something that the Saudis have embraced, but I think we saw, in years before in the UAE and even in Qatar, which has taken I think a less ambitious diversification strategy. They see a longer life for their product in gas, are still very open and able to invest in their own economies. And that's sort of another issue when we think about the disaggregation within the MENA economy. The places where there is money, where there is capital and appetite for investment are interested in investing in themselves rather than in spreading that money in a region-wide development project.
Yeah, it makes a lot of sense. Also raises a lot of questions about reconstruction in the future.
Yes.
Karen, we're going to have to leave it there. Thank you so much for coming on our show today. Karen Young from Columbia University Center on Global Energy Policy. Well, Egypt says it will not accept the continued presence of Israeli forces along its border with Gaza. That is according to AFP. A key sticking point in the ceasefire talks have been calls for Israel to withdraw its forces from the border area, including the Rafah crossing, the only one from the Palestinian territory that was not directly controlled by Israel. And still ahead, hear why Neovision Wealth Management expects 3 Fed cuts this year following Jay Powell's dovish signals at Jackson Hole. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. Asian shares are lower after tech giants dragged down U.S. stocks as investors await NVIDIA earnings later this week. Tomorrow, actually. Markets are also pricing in the prospect of lower U.S. rates. San Francisco Fed President echoed Chair Jay Powell's comments that it's time for policy adjustment.
Well, to my mind, we've been on this path of ready to adjust policy rates for several months. We just needed to get a little more confidence that inflation was truly on its path to 2%. And I wanted to see the labor market come into balance, but I think that's completely happened. And the risks to our goals are now balanced, and the time to adjust policy is upon us.
Mary Daly, San Francisco Fed President there. Let's bring in Ryan Lemand, a Neovision Wealth Management CEO and co-founder. Well, Ryan, it's good to have you back here. We've had many chats into the end of the year about what you see happening with the Fed. And you've been consistently saying that you expect them to cut three times or even more. And it seems as though Powell himself has come around to that view per his Jackson Hole comments. Were you surprised to see how much of a dovish pivot we got at his Jackson Hole speech?
His speech at Jackson Hole was surprising indeed. It's a big U-turn, and I find it a little bit alarming. There are 3 things. The first thing is he didn't mention the word graduality, which he always uses. Second, talking about risks, he didn't say even, he said changed. That's radical. And then jobs now are on the driver's seat.
Yeah. Do you think they might cut 50? in September?
So this change in the tone in Jackson Hole, yes, makes me say they might cut 50. Now it's about convincing the hawks on the board, which I think will be a little bit difficult given how much government spending is happening, fiscal spending.
Yeah.
This is obviously stimulating the economy, and let's not forget PPI is under pressure. Shipping rates, oil, you just talked about oil with Anthony. This is upside for inflation.
So let me just put this to you. If they do decide to go for a 50 basis point cut because he manages to convince the other members of the board that it's necessary, that the economy warrants it, how would the markets interpret that? Does it not seem a little desperate out of the Fed, or indeed sending a signal that they're a lot more worried about the state of the economy than we thought a couple of weeks ago?
We were discussing this just yesterday in the investment committee. It's a knife's edge. Some will interpret as, oh, something's going on. Jobs are much worse than they are.
Yeah.
And the correction of 818,000 is massive.
Those BLS corrections.
Others will celebrate it. Well, free money is back or is coming back.
And so how do you think markets will interpret it, though?
Well, for us, we're interpreting, at least I can talk about myself, or ourselves, our company, we interpret it as things are worse. Jay Powell has expressed his lack of faith in the BLS jobs numbers several times. So jobs are worse.
It is, and we got that out of the BLS revision last week as well. The other big data point for the market this week is going to be NVIDIA earnings. So people are saying that once Powell is out of the way, the next big driver for where markets go from here is one stock only, and that is NVIDIA. Let's say NVIDIA disappoints. Is that going to be the catalyst for these stock markets to finally have a sustained pullback? Because we thought that was coming a couple of weeks ago, and yet we've pretty much fully recovered now. S&P is back to close to all-time highs.
Well, it feels there are lots of memes around. I mean, you've seen them where the whole world is standing on the feet of NVIDIA. So yes, if they disappoint, this will affect not only the U.S. stock markets, but many other foreign stock markets. Now, will they disappoint? I doubt. It's all about the guidance. The Blackwell postponement is not a positive thing. So we're going to be looking at the guidance. If they disappoint, yes, absolutely. I think NVIDIA will go back to $100.
Yeah, but looking at your positions, we've discussed this before, your 40% equities we've spoken about, you do have positioning in U.S. equities. How do you account for the fact that there's so much concentration and focus on one stock in particular? Can you hedge, or do you just accept that it's par for the course?
Our U.S. equities positions are very small, and we look at non-cyclicals, dividend-paying, cash flow-generating companies. We're not into tech at all. This is too much volatile for us as institutional investors. Such volatility consumes our risk budget, and we cannot afford that. This is more a trader's market than an investor's market. We're into something completely else within the U.S. market.
Final quick one. You expect the U.S. dollar weakness to continue. Why?
100%. I expect it to continue because the carry trade has broken down. It will continue to break down. It's all about now the yuan carry trade, if it's going to continue or not.
Yeah. Okay. That's a good place to leave it. Ryan, we'll pick up the conversation about the yuan. Certainly some interesting comments overnight coming through on what the weakness in USD could mean for yuan and some of the carry positions there. Ryan Lemand, Neovision Wealth Management CEO and co-founder. Thank you very much. Right. Also coming up, Russia hits Ukraine's energy sector with a barrage of missiles and drones, causing blackouts and leaving at least 3 people dead. We'll have the latest on the conflict next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Russia has hit Ukraine's energy sector with a barrage of missiles and drones, which caused blackouts and left at least 3 people dead. As winter approaches, Moscow is stepping up efforts to knock out Ukraine's infrastructure, including power, heating, and water supplies. This latest attack comes as Kyiv continues its incursion in the Kursk region of Russia. Now, International Atomic Energy Agency, the IAEA Director General Rafael Mariano Grossi has said he will be personally leading today's mission to the Kursk nuclear power plant in Russia, quote, given the serious situation. So let's bring in Jonathan Tyrone, who covers nuclear diplomacy for Bloomberg News. Jonathan, good morning to you. The IAEA last week just warned of a Chernobyl-style accident at Russia's Kursk nuclear power plants. That sounds very alarming. What is the current state of play?
Well, broadly, we're talking about an extension of the electricity wars that you alluded to. Russia has been targeting Ukrainian electricity infrastructure for 2.5 years. And now what we see is a grave and growing risk to one of Russia's largest nuclear sites in Kursk. It has 2 operating reactors, 2 reactors under construction, and 2 more that are being shut down. The 2 operating reactors are so-called RBMK reactors. Those are a old Soviet design, similar to what melted down in Chernobyl in the famous 1986 accident. And so it's a combination of encroaching Ukrainian forces who are now within artillery range, according to Mariano Grossi, along with this outdated technology, which is unique because, like Chernobyl, it does not have a secondary containment structure. These big domes made of concrete and steel that we saw in Fukushima, for example, when the Japanese accident occurred in 2011. Most of that radiation was contained locally. That's not guaranteed if an accident takes place in Kursk.
I remember, it wasn't that long ago that we were talking about the concerns of the Russian occupation of the Zaporizhia plant. I don't know if I'm pronouncing it correctly, but the Ukrainian nuclear plant in Zaporizhia. How does this situation differ from that particular plant? What makes it more dangerous?
Yeah, that's precisely it. Zaporizhia is a modern nuclear power plant. It's a so-called VVER 1000 plant. They do contain the containment structures, these large concrete and rebar steel domes that, first of all, would be hard to penetrate for artillery or rockets. And second of all, if there was a meltdown inside, there would be containment of the radiation from entering into the atmosphere. Those features are not present in Kursk, so therefore, even if Ukrainian forces are not targeting an operating nuclear reactor, the margin for error is much smaller because of the weak design features in Kursk. This is a kind of reactor that will never be built again because of the safety flaws inherent in its design.
Yeah, that makes sense. Well, we're going to leave it there. Thank you very much for giving us the overview. And of course, it is a story that we all need to be covering very slowly, given the potential ramifications could be quite serious. Jonathan Tyrone in Vienna, thank you so much. Well, a quick look at futures before we head out to the break. And markets are not doing a whole lot. We are leaning sideways for S&P and NASDAQ. We saw a bit of a pullback in the NASDAQ yesterday. Euro Stoxx futures tilted towards the green. But coming up, we're going to be speaking to Woodside Energy CEO Meg O'Neill after the firm reported net income for the first half year that beat analyst estimates. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Libya's eastern government says it will shut down crude output and exports as dueling governments fight over leadership of the central bank. Stocks lower as big U.S. tech drags on Wall Street ahead of NVIDIA's much-anticipated earnings report. And Canada slaps 100% tariffs on Chinese electric vehicles. China is warning of consequences. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai. Let's get you caught up on these markets. And we saw quite a positive reaction out of Wall Street on the Friday close, of course, but even yesterday, some continuation of that theme as the market centers around the narrative that the Fed are about to begin their easing cycle. S&P about 0.8% away from all-time highs. Dow actually making new all-time highs, and NASDAQ slipping somewhat, some nervousness into those NVIDIA earnings coming out on Wednesday. Today, futures are trading sideways, not doing a whole lot. The dollar also trading sideways today, but of course the theme has been one of weakness. We are down about 3% over the course of the last month, again as those dovish expectations get built in. Brent in focus today sitting at around $81. We were down about 0.2%, but we did jump more than 2.5% yesterday on news that Libya were looking to disrupt the supply coming out of some of their oil fields that is in the western part of the country. And so let's just flip over and take a look at how Libya's oil output has fluctuated over the course of the last decades. And it's not surprising to hear this because of the turmoil in government and governance, that production does tend to be quite volatile. We saw that around the times of COVID and even prior to that as well. Production tends to get slashed every time these political issues get flared up. So something to bear in mind as you think about the outlook for the oil sector from here. But of course, that is not the only driver for oil in coming months. We're going to be talking more about that shortly. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, just give us an overview of how these Asian markets are faring today.
Yeah, they're faring negatively. Take a look at the stock gauge for the region. They're feeling the heat from the drag in tech stocks as the chip makers languish ahead of NVIDIA's earnings later in the week. And we're also seeing trading volumes lower than usual this time in the session. So it gives you a sense of how investors are perhaps sitting on the sidelines. A bit of an outlier from Nikkei in Japan. This is amid the weakness we're seeing in the Japanese currency, returning slightly there. But flip the board, I also wanted to talk you through what we're seeing in Chinese tech names, the e-commerce ones, after we got that reminder about weak Chinese consumption from Pinduoduo earnings after its revenue miss, but it also warned about slowing sales. So that's really hitting sentiment for other Chinese e-commerce firms. That China demand is also, I think, a key part of the equation for BHP Group. Its earnings, profits were more or less in line with expectations, but it did talk about some of this uneven recovery in China. Its stock is up today. Jumana.
Excellent. Avril, thank you so much for that overview. That was Avril Hong in Singapore. Now, Woodside Energy shares advanced after the Sydney-listed oil and gas producer reported net income for the first half of the year that beats average analyst estimates. Australia's biggest LNG producer posted a 14% decline in underlying profit on softening LNG prices. You can see the reaction in the stock today. It's up more than 4%. Really happy to say that Meg O'Neill, CEO and Managing Director of Woodside Energy, joins us now. Thank you for joining our show, Meg. Let me just start off by asking you what you would say, in your own words, were some of the highlights of the quarter.
Well, thanks for having me, Jumana. I really appreciate it. It's been a fantastic first half year for us. Very strong performance out of the base business. Our LNG operated assets had reliability of 98%. Team did a fantastic job of cost control, so our unit production costs came in actually lower than the same period last year. And those strong underlying performance results underpinned strong financials despite the weaker price environment. So really pleased with how the business is tracking.
Yeah, I think many analysts were interested in looking at the dividend payout. And even though on an absolute number, it's lower than where it was a year ago, in terms of payout ratio, it's coming at the high end of expectations. What is your guidance on dividends payments in the future, especially given your investment projects?
Sure. So our dividend policy is to pay out 50% of underlying net profit after tax, but we pay out in a range between 50 and 80%. For the last 10 years or so, we've been paying out at the top end of the range, at or near that 80% mark. And we know our shareholders value the dividend. Many of our shareholders are in Woodside because of the upside that they get from the dividend. And so as we think about the forward trajectory of the business, we do a lot of work to model the investment profile, the cash flow profile, and to really test whether or not we can sustain that high payout ratio over time. The thing that really gives us confidence in being able to do that is the strength of the balance sheet. So BBB plus credit rating today, 13% gearing. So we're well positioned to be able to continue investment and return value to shareholders.
Let me ask you a question about gas prices, because we have seen a pullback in Asian gas prices since the highs we got to in 2022. What do you see the direction of, where do you see the direction of travel from here? What is the outlook in the coming months?
2022 was really anomalous. So that was the year of when the Ukraine conflict began, and that triggered a significant rewiring of global gas markets, with LNG needing to be pretty suddenly rerouted from other destinations into Europe to help Europeans keep the lights on over the winter time period there. What we've seen since in 23 and now in the first half of 24 is stabilization of prices. But what we're seeing in the forward curve, particularly in Asia, is actually a bit of a tick up versus what we would call a typical pricing level. And that's a sign to me that the market is finally balanced. Gas is a seasonal commodity, so when winters are cold, gas is often the energy source that gets called on in a disproportionate amount. And so the price levels that we're seeing in the forward curve for me are indicative that the market is nervous about a cold winter and what that might mean, and the customers are trying to get ready.
Can I also just ask you, as a follow-on to that, how you see demand in Asia panning out as well? Because many C-suite executives have pointed to the fact that demand, specifically out of China, has disappointed to the downside. What signals are you seeing?
We're actually seeing quite a bit of buying. We're seeing that China has taken more LNG in the first half of this year than they took in the first half of last year. We do watch the Chinese economy closely to understand the trends and the overall level of economic activity. But one thing that's really striking is when we look at where gas fits into a world that is tackling climate change and trying to transition away from higher emission source types of fuel, there is still a huge opportunity for LNG in Asia, particularly to displace coal. About 80% of the world's coal use today is in Asia. And so if you're looking to cut emissions, gas displacing coal has about half the life cycle emissions. So we do still see a very bright future for LNG.
Let me ask you about some of your M&A plans. You recently acquired LNG developer Tellurian. Let me just ask you about that one specifically. Do you know when Tellurian shareholders are expected to hold a vote on the takeover? Can you give us any more clarity on the timeline of this deal?
Yeah, that date has not been set yet, so there are a couple of steps that Tellurian has to go through with getting the SEC to review the prospectus, and then they have to mail that out to shareholders. So we're hoping that vote will happen in September, October, but it'll really depend on the regulators. At the end of the day, we hope to be able to close the transaction in the fourth quarter, and that'll position us well to be able to take an investment decision in the early part of 2025.
Do you have any plans to further expand with your M&A portfolio?
Well, we've just done two big deals, Tellurian, and then we announced a second transaction to acquire OCI's clean ammonia project in Texas. So the focus right now for the organization is completing those transactions, bedding down those new parts of the business, and really getting ready for the significant investment phase that's ahead of us at Driftwood.
Yeah. One thing that stood out to me in the earnings release is you mentioned that there is uncertainty in the regulatory environment and the geopolitical landscape. What does that actually mean for the development of future gas projects? And is it likely to derail some of your plans?
Look, it's a challenge we're seeing in many places around the world as governments grapple with the question of energy security, energy affordability, and carbon intensity and how to tackle climate change. We've seen a lot of policy changes here in Australia. Even in the US, there have been policy changes with the LNG pause, so the pause on approving new LNG projects, which I'll note does not affect our Driftwood project. So those are the sorts of uncertainties that makes it more challenging to predict where and when we might invest in our sector.
Can I just ask you, given we're talking about geopolitics, but also politics as well, you have a tremendous amount of U.S. assets. How are you thinking about the upcoming U.S. presidential election and a possible change in leadership from the Democrats to Republicans? Is that likely to affect your own business development?
We watch the energy policies of both parties very closely to understand what actions they might take that affect our sector. But the great thing about the U.S. is the market works very effectively in the U.S. And if you look at the facts, oil and gas production has grown more under Biden than it has under the previous Trump administration. So at the end of the day, both U.S. parties are concerned about cost of living for domestic customers, and increased domestic energy production is a key tool in helping manage those cost of living pressures.
And finally, I just want to round things up. I'm actually doing this interview from Dubai, so we're based in the Middle East. And I know one of my colleagues in Saudi Arabia had an interview with you a couple of months back. I'm just wondering how you're thinking about potential opportunities within the Middle East. Is it an attractive region for you to invest in? Do you see that the region can compete strategically with the assets that you have in the U.S.?
The Middle East is incredibly important in the global energy sector. Significant oil production, significant gas and LNG production. So it's important that we have good relationships there, and it's important that we have good insights as to how the market is evolving there. Look, we assess a range of investment opportunities around the world, and if a player in the Middle East wanted to invite Woodside in, we would be happy to entertain that conversation.
Okay, very clear. Meg, appreciate your time on the show today. Thank you so much for joining us. That was Meg O'Neill, CEO and Managing Director at Woodside Energy. Now, BHP posted a full-year profit broadly in line with expectations as revenue from iron ore and copper increased despite a worsening Chinese demand outlook. The CEO, Mike Henry, says the firm expects near-term volatility in global commodity markets, with China experiencing an uneven recovery. China's slowing economy is dampening demand for metals, especially iron ore, which accounts for almost two-thirds of BHP's revenue.
Property sector itself, which makes up about 20% of steel demand, that is weak. It's been weak for some time. We've seen lower or fairly low levels of both sales and new starts. But the Chinese government is enacting policies that are intended to address that, and that includes relaxing some of the constraints on property purchases. There's a government program underway to mop up some of the excess inventory, and we expect those to start to have effect through 2025.
And NVIDIA is reporting second quarter results tomorrow. The company's CEO, Jensen Huang, will speak exclusively to Bloomberg Television shortly after the numbers drop. We'll have special coverage for early risers across the region starting 2:30 a.m. on Thursday, very early risers, or late, depending on how you think about it. And that is 6:30 Wednesday evening in New York. Well, also coming up, Ghana's vice president is backing harsh anti-LGBTQ laws as he looks to win over conservative voters in his bid for the presidency. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Let's focus on West Africa. Ghana's vice president is backing harsh anti-LGBTQ laws as he looks to win over conservative voters in his bid for the presidency. Citizens are challenging the proposed bill that calls for anyone who identifies as LGBTQ to be jailed for as many as 3 years. Let's bring in our Africa correspondent, Jennifer Zamazaja, who joins me from Johannesburg. Jen, just walk us through the comments from the vice president. What exactly did he say and what is he proposing?
Right, Jumana, this is a bit surprising. As you mentioned, of course, this is the vice president of Ghana right now. He's running to be president. He's seen as a bit of a long shot, but the fact that he's trying to appeal to potentially conservative voters in the country was notable to a lot of people. So what we heard from him is that he said he would sign this bill automatically if the Supreme Court were to rule on its constitutionality, which has really been the holdup of this bill becoming a law. Now, this bill, as you were mentioning, it's really drawn a lot of divisions depending on where you look at it. There are some politicians who are saying that supporting it goes in line with their own religious beliefs, their cultural beliefs, and the bill itself is called Human Sexual Rights and Family Values Bill. And so we're hearing a lot of politicians really back it based on that fact. But as you noted, there is a lot of the population who is looking at this and saying that this goes against their own human rights. And so it was interesting to hear him say this. We've also heard Mahamadou Bawumia, which is the vice president, make a number of other promises. But fascinating that he's choosing to take this stance at this point and potentially setting up an even more precarious situation for the current president to expedite the process here.
What is the likelihood that this bill actually does get passed? I mean, it is still a bill at this point, not a law. So what is the probability that it actually does get passed into law?
Right. Well, what's important to note is that we have elections in December. The current president, Nana Akufo-Addo, is not running again, but this bill needs his signature in order to become law. And he, similar to what we heard from the vice president, has said that he will sign this bill if it is the will of the people, but is waiting on the Supreme Court to rule on this. So it's really unclear what's going to happen. We've seen this bill over the past few years make its way throughout Parliament. But it's seeming like potentially the president does not necessarily want to rule on it, and maybe is trying to sort of pass the baton to whoever the next president is. But the vice president was not the only one who was making comments on this specific bill. We also heard from the opposition party saying that, again, he said in particular that homosexuality goes against his own religious beliefs. And so it'll be fascinating to see really what we continue to hear from these candidates leading up to the election. And of course, because of the current economic situation that Ghana is currently in.
Yeah, I mean, that's also the other key question here, and whether the passage of a bill like this would derail their ability to attract international funds, investment, and help aid. Jennifer, thank you so much for the review of that bill. Jennifer Zabasaja. Now, more from the West African nation. Ghana is banning the export of some grains, including rice, corn, and soy, to stave off a food shortage. A drought over the past 2 months in the north of the nation is destroying crops and threatening food production. Ghana's finance minister says they are looking to raise $500 million to mitigate the impact of the shortage. The World Health Organization is seeking $135 million as it launches its global Mpox response plan. The funds will be used to help scientists better understand the fast-spreading new variant. This move underpins efforts by the agency to stop chains of human-to-human Mpox transmission. Cases of the disease are ripping through Central Africa, killing hundreds and infecting thousands. Coming up, Canada set to slap a 100% tariff on imports of Chinese-made electric vehicles. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Canadian Prime Minister Justin Trudeau has announced a new set of tariffs on Chinese-made electric vehicles, aluminium and steel, joining Western allies in taking steps to protect domestic manufacturers.
We will be introducing a 100% tariff on Chinese-made electric vehicles and a 25% tariff on Chinese steel and aluminum. But actors like China have chosen to give themselves an unfair advantage in the global marketplace.
Well, for more, let's bring in Bloomberg's China correspondent, Min Lau. Let's just start off by talking about how extensive these tariffs are, because they sound remarkably similar to the ones that U.S. and the Biden administration also imposed.
Indeed, they are very similar, and not surprising here given that Canada is an export-driven economy that relies heavily on the U.S. The U.S. buys about 3/4 of Canada's exports, and it imports about 60% of its goods from the U.S. as well. So it's following very closely in line with the Biden administration tariffs when it comes to those electric vehicles, 100% tariffs, not just on full electric vehicles, but also some hybrids as well as buses, delivery vans, trucks. It's a preemptive move here because Chinese producers don't have a strong foothold in Canada just yet. But the Canadian government is also looking to restrict consumer incentives for EVs to those vehicles that are made in countries that have a free trade agreement with Canada. Obviously, China doesn't have one, but Canada does have a free trade agreement with Mexico and with the U.S. So could Mexico be that final gateway left for Chinese producers to enter the North American market? That is the big question here. And Canada is also looking to start another 30-day consultation period to impose maybe more tariffs on other products, including solar products as well as battery parts, semiconductors, and critical minerals as well. So potentially a whole new wall of tariffs that could be coming for Chinese producers here.
Yeah, and what impact will these actually have on Chinese EVs? At the end of the day, and this was very similar in the U.S., not that many Chinese EVs are imported.
That's right. So last year, if you look at the trade numbers, China exported about $1.6 billion worth of EVs, but most of those were Teslas that were made in Shanghai's Gigafactory. So what could happen is that maybe Tesla may shift its production away from Shanghai back to America to export into Canada. When it comes to the Chinese brands, as you said, they don't have a big presence in Canada right now. And if we look at U.S. as an example, the tariffs have already pretty much wiped out any chances of these brands getting a foothold in that market. So the same thing could happen in Canada. BYD, we know, had specific plans to enter the Canadian market. Just in July, they had informed the Canadian government of their intention to lobby officials to enter that market. But it looks like now the math will not really work in BYD's favor. We do know that BYD does have a big presence in Mexico, though, and they're looking to open up a plant there. Could that be the gateway for them to export to Canada because of this free trade agreement between Canada, Mexico, and the U.S.? That is the big question here. It's a worry that the U.S. has, but BYD has said that they will not be looking to export from Mexico, trying to assuage some of those worries there.
Min, excellent context there. Bloomberg's China correspondent Min Lau, thank you so much. All right, well, that was it for our show. That was Horizon's Middle East and Africa. Stay with us for Daybreak Europe. I will be back in a couple of minutes.